What is up, everybody? Welcome back to the Russel Journal. My name is Russell, and this is my journal entry for today, Sunday, October, I believe it's the 23rd. Hold on, let me look. Was heard it was, yes, October 23rd. We are looking into the week ahead and what's going to happen. The title of this show is really how to stop bottom picking. So here I need to speak really quickly to the fundamentalists of the stock market. If you are a fundamentalist, you have to know, if you're a fundamentalist, you are inherently bearish, okay? You're thinking there's no way we could go up, there's no way this thing is, and to be honest with you, most of the bears don't seem to think that there's any way that this can do anything but crash, right? They are dying for that capitulation, that 5 to 10% move in a single day. And they're like, they're upset they're not getting it. All they want is that crash, and they think it should happen. The economy's in really bad shape, da-da-da-da-da. But if you look around you, there's nobody really starving in the streets here, right? There's not a string of people being moved out of their houses via foreclosure. Sure, foreclosures are on the rise, but it's not the end of the economy as we know it. So the idea that we can have a move up shouldn't be against you. And the other thing is, if you are a trader, if you're a swing trader, right, and you're using fundamentals, then you shouldn't be surprised by anything if you're a swing trader. You should understand that there's technical traders out there that make things happen based for technical reasons. So the fact that we would get a rally in this sort of tumultuous time, you shouldn't be upset by that. And you should be, but if you're a technical, or if you're on the bull camp, you're nuts, right? The bull thesis is absolutely insane. This Fed pivot is a good thing. Sure, it makes stocks go up, but if that happens, it will lead to that crash, right? So the whole process of the Fed pivot, even as a bull, you shouldn't want that. You should want a nice, slow, consistent, uniform sell-off if you're a bull. When times turn around, when the Fed gets inflation under control, you should want that to happen. You can acquire stocks cheaply. You can build your inventory and manage your cost basis. If you're a bull, especially a long-term bull, you should be you should be having the time of your life in this bear market. You are getting discounted prices, and it's not going to go down and never come back, right? Every time it's like, oh, it's the end. It's never been the end, right? So, and if it is the end, you have a lot more to worry about than like the value of your stock account. So, again, I really want to just emphasize what's happening here, and you have right now, what you're going to hear in the media is a lot about this Fed pivot. You're going to hear them talk about it. And it's really only masking the technical side of the trade, okay? Right now, what you have is the bears exhausted price, exhausted sellers to the downside. They reached massive targets. They hit the lower Bollinger Band on the daily, weekly, and monthly charts. They hit the 200-week EMA, and for even if it was for a brief second, they managed to make it all the way down to the 200 SMA in the S&P. So the thing is like, those are pretty awesome targets. That's a pretty good run if you're a bear. It's probably some time to take some money off the table. But guess what? Other traders are out there. Other traders who know the market, know what's going on. And they also know that the bears are going to start taking money off the table at these places. And so what are they going to do? Are they going to just sit there and be like, no, because it's bad economic conditions, we're not even going to bother? What do you think they're going to do? They're going to, and even worse, you have Goldman Sachs announcing that they're shorting. You had Morgan Stanley announcing that it was shorting. You had TD Securities. You had Numera, right? Even Michael Burry has announced that he's short. Everybody's announced they're short. It's still a there's still technicals involved in the market. You can't ignore technicals, and I don't care whether you're Michael Burry or or Jim Cramer or anybody, right? Like Jim Cramer ignores the technicals all the time, right? And so does Michael Burry. They don't seem to care about the technicals. But there's technicals, and there's people in the market operating on technicals. Sure, Warren Buffett doesn't have to care about them because he's loaded. But the rest of us do. And because we do, and because there's opportunity, they can force a short squeeze. And the short squeeze, because of the way that the chart works, the way that we adjust, we look for that, we establish trend, right? Because of that, that also means you can get more of a bull rally. And the idea now that there's some bull thesis behind a Fed pivot, that is absolutely nuts, right? Now, at the same time, the one thing that the bulls, and they're not even the bulls, they're just investors, long-term mutual fund investors that have to manage a cost basis, okay? The idea that rates would stop going up very, very quickly and that they would stabilize at this level means they can have a cost basis for which to balance their portfolios off of, right? Again, businesses do cost of goods and labor is their cost, right? In their business. This is the cost of goods in their business. But for these managers, their cost of goods is the cost of money. So what they use and how much they utilize and how much goes into what they produce as to gain investment profit is relative to their cost of money. So these guys who really don't have to worry about technicals, yeah, they're somewhere like, okay, rates are going to normalize at 4%. At 4%, how many shares can I buy of Amazon? How many shares can I buy of, right? And at what price, right? Because they can't just go in and pay whatever the market price is. They have to balance. That whole thing has to make that portfolio balance out. This percentage is allocated to tech, and this percentage is this. And those percentages are adjusted based on that cost of money, right? And then they get into the justification of the PE ratios. So all of that being said, you can absolutely get some buying here. And you should see that if rates do start to slow, right? Even if the Fed keeps raising, right? We know the 75 basis point is going to come in, but that's priced into the market. We've already discounted for that. And there might be one more. But what happens after that? 25 basis points? 50 basis points? The Fed has just honestly, we went from I think it was a quarter point Fed funds rate to over 3% now, headed for 4%. That's 16 times what it was in the span of a year, right? So the thing is at some point the Fed needs to stop, and they have to wait and see if the sales growth slows. If the sales growth slows, then inflation will come down. But they have just gone rapid fire after it. But at some point they do have to pull off a bit, and this is a chance for them to go, okay, we can borrow money or get money at 4% interest, and we can come back in and buy it, okay? So I'm not going to keep beating that dead horse. The thing, so today what I really, really wanted to get into, two things. One, if you made it through the rant, first of all, I should say, like and subscribe to the channel. I love you guys. Hope you are enjoying the content. I do have some announcements to make, but we want to get through the technicals first, and then I've got some stuff for you guys. So I'm going to jump over here. We're going to jump into Chart of SPY. We're actually not even going to bother with all the other charts because they don't really matter at this point, especially given the fact that we're sitting in this technical rally. Okay, SPY. Daily. Okay, we're going to zoom in on this. Are we on the... There we go. SPY daily. I'm going to delete all. All right. So clean that up for you. All right. Okay. I'm going to step back over here. That kind of puts me in the way. All right. So here, you can see that the trend is up. Okay. Here we can see that the trend, I can't even see it. Here we can see, basically, I have no idea what my hand is doing. We can see that the trend is up, okay? This one light is like blinding me over here. All right, pardon me, I gotta keep this up. All right, so if you see here, your trend is up, okay? Now, two things happened here. Okay, back, I gotta step back here. Back here. This is back where that big day was, where everything, okay? You hit this, there's a 200 weekly SMA down here, and you hit it. And that was a big profit target for any bear. The next thing you had to know is any bull's gonna know that that's a big profit target, and that they were gonna hammer it hard, okay? This is the thing here. This gave you a higher high and a higher low right here, okay? You got those two things off of that. At this point, okay, the shorts started coming out of the market. Any big, smart trader who knows the rules was coming out of the market, okay? And then you got confirmation of that. And once we got confirmation of the higher low, then you got the next higher high, okay? Now, what you also can see happen with that is momentum came up, okay? When momentum comes up, and especially when it comes up and you're getting over the 18-day moving average, what is the next target for any trader? The next target is the upper Bollinger Band. Now, we're going to go over and look at this. Okay? We are in the futures. And right now in the futures, you can see the S&P is up 14 points. Okay? We closed around 375. We're up 14 points. That's roughly like a buck and a quarter, right? So where we're going to wind up opening up in the morning is right here. Hold on one second because I can't see. Where you're going to open up here is in the morning is probably pretty close right into that 380 level. Okay? You're going to wind up in that 380 level right up there. Okay? Right up here. Okay? You're going to wind up in this 380 level. Now, there's two things that can happen here. Now, one, usually stocks do not go above their upper Bollinger Band, especially the indexes like SPY and QQQ. They do not like to go above this. But you have a lot of guys short here, okay? Now, I will argue that anybody who was short this, if they didn't come out down here, they started coming out right here. So unless they're like fundamentally short and planning on staying short in fundamentals, they're not going to cover at this upper Bollinger Band. At the very least, they're going to wait till it comes off of the band to start to cover if they haven't covered at this point, okay? But in the event that the algos, right, are short this and their stops are above that upper Bollinger Band, we could get a really nasty rally all the way through here, a really nasty squeeze. It's going to be a hard trade. More than likely, what is going to happen is you're going to hit that 380. And this is just for tomorrow, okay? You're going to put some pressure on that 380, okay? And this is the reason why. I'm going to show you the reason why I think that this is actually going to hold. It's not going to go crazy tomorrow. I don't think it will go crazy. I think it'll hit that upper Bollinger Band. It might create a gap. It might come back and fill this gap. But if you look at the slow stochastic, whoops. If you're looking at the slow stochastic on the weekly time frame, you are coming out. You're getting ready to come out of oversold. Anytime it comes out of oversold on whatever time frame, it goes back to the 18 period moving average. In this case, this is the 18 week moving average. So it is headed for 387. Now, the one thing I will tell you is the trend on the weekly time frame is a bear trend. You can get up to 387 without losing the bear trend. So if the shorts are looking to come in and hammer this back down, it will be from 387. But on the daily time frame, you have the bull trend. And you'll have more guys pay more attention to the daily time frame than the weekly time frame. So what you really have here is by the end of this week, what you need to see is a catalyst that will take this thing down, okay? So we don't have that catalyst just yet. Although, okay, going into this week, it is a big week. We have coming for us this week, we have big tech earnings. You start off with, you got Microsoft and Google coming in on Tuesday. You got Meta coming in after that. And you have Amazon, I believe, on Thursday. So it's big tech earnings week, okay? What this is probably going to do is try and make a run by Tuesday for 387, okay? The reason it's going to do is, okay, again, this is now, you got to understand, we're going to put all the fundamentals and everything together, okay? Markets, they reach a point and they don't know what to do. So they will go back to their neutral location. This is the 18 week. This is the 18 month. This is the 18 day, right? Moving average, right? Whatever is a really close major moving average. They go there and they try and figure out what's the next thing to happen, right? With big tech earnings coming, okay? We have a real push-pull situation, okay? The big tech guys need to come out and offer lower guidance. They need to lower guidance. If we get lower guidance, it means there's a chance to lower inflation. We also need them to come out and talk about how they're going to start laying people off. This is also another chance to lower inflation. This also means if you are looking for a chance, if you're looking for a chance for the Fed to either stabilize those interest rates or pull back a little bit in how much they're raising, those earnings are going to give you the window into what the Fed is going to do. If you're starting to see the layoffs coming, we start to see the unemployment rise, that means you're one step closer to the end of inflation. So this, again, not going to be bullish. The problem is, no matter what, this is not going to be bullish. So if you're me, I'm definitely looking to start putting on a put position right there at that 387. But until we get there, I will be looking for a nice little pullback. Hopefully Monday we come back. We will get the gap up. It's going to gap up. Hopefully we get the pullback. We can all find a nice spot to buy some calls. Ride this bad baby up to 387. And then 387 we'll switch over and ride and get the puts, because those earnings, again, if they come in good, like really, really good, that's not going to be good for the idea of a Fed pivot. So it's really, really conflicted. It sounds like really, really good news, but in the long run, the Fed pivot, that whole thing, it's rough. It is rough. So, but we are looking to take a short position from 387. That's going to be primo spot. In the meantime, don't listen to these guys a lot with the Fed pivot. All right. So that is kind of all of that has to say. I could go show you what happened in the dollar, but it's not really any different than last week. It's still got no trend. I could show you the VIX. The VIX is getting crushed right now. It is headed back to the same thing. It's the inverse of this. It's headed down to the 18-week moving average. So the VIX is getting pretty well crushed. So that's kind of where I'm at. I think these company earnings, they're not taking the hit yet that they need to. So based on low PE ratios and still high earnings, stock prices still don't have to come down that much more. Okay, so anyway, that I think just about cuts it for me, wraps everything up for me and what I wanted to talk about today. The Russel Journal is written, edited, and hosted by me, Russell. Oh, I forgot before we go. Okay, this channel is going to switch. I'm going to become a lot less focused on technical analysis, and we are going to turn this more into a documentary type channel. I am going to really document this journey. So I will tell you that my balance in my account is about $977 to trade with, and that right now my first goal is to reach a salary of about $28,000 a year, which equals about $100 a day is what I need to generate in order to make this a professional job for me. However, a lot of the things in the coming weeks, for now, we're going to keep it kind of doing a little technical analysis here, there, and everywhere. But in probably starting next week or the week after that, it's gonna have a more vlog type feel. So be watching for that. Be watching for those videos. All right. In the meantime, the Russel Journal is written, edited, hosted by me, Russell Liss. We are produced with social media shows. Our executive producer is Maria Pureza. Check out socialmediashows.com. I don't get paid for that, but they help me, so they can help you too. Anyway, all that being said, until tomorrow, we just pretend I said that catchphrase.